Good afternoon, everyone. I'm Richard Davis at the U.S. Bank. This is Bob Kelly from Bank of New York, and this is Jim Rohr from PNC. We're pleased to tell you a little bit about the meeting we just concluded with the President. It was very productive. He gave us some very strong outlines about things that he expects from us as parties to recovering this economy. We talked first about credit availability. We talked next about housing and modifications. We talked about executive compensation, and we talked about financial regulatory reform. To your pleasure, we aligned on most of those issues, and we agree that we can do a better job of telling our story and working better with the American public to make loans more available and to do our very best to tell the story about regulatory reform and how much that matters to all of us for the betterment of this great economy. And then finally, we agreed very much in the principles of executive compensation, and we are looking forward to you seeing the good efforts that we've taken in the last couple of months as companies report 2009 earnings and move into 2010 to align the interest of our compensation with our taxpayers and our shareholders in a way better than we have in the past. So it was a very productive meeting and one that I think will move forward to the next level of solutions that will work together with this administration as we have in the past. Bob?
Good summary. Questions?
What was the greatest areas of disagreement?
You know, there wasn't a lot of disagreement. There was simply an opportunity for the President to make clear to him how important some of these issues are. And while we've done a good job individually of talking about how we're aligned with some of the very principles of the administration, as a group we haven't done as good a job as we can in the future to align the interests of our constituents and of the American public. And I think we agreed that there are better ways to do that, and he gave us some very good ideas on how to be better at communicating that and describing that in the real streets of America, not just in the press conferences.
A lot of good discussion on lending, too.
You just don't get it. You don't understand how angry the American people is when it comes to the tens of billions of dollars some of your firms have received from the taxpayers, and then the loans not coming through, not participating in the housing help program and the executive compensation. Yes. What was his tone today? Was he irritated with you? Did he express anger?
The whole meeting was very productive. It really was. We're in this together, and we understand that the bankers are not surprised by the public response. We're paying attention to it. We get the same letters from small business owners who want more availability to credit. So for us, it's a need to balance the risk and the reward. And in the times past, it was easy for us to do what was right without everyone watching every step. Today, we realize we're under the microscope to show every step that we take to do a better job of listening to customers, paying attention to their needs, and being more available than we have been in the past. So I think the productive conversation allowed us to align our thinking and be more in line with each other as we talk to the American public about being party to this recovery. We haven't done a very good job of saying that, and we're going to now.
But how did you do on small lending, given that most...
There's so much agreement. Where's the lending from last year?
Where's the lending?
If you agree so much with the president that something needs to be done, he's been saying this since he was president-elect, and yet he still has to call you here in the White House to say, where's the money to small businesses? Where's the money to consumers? So if you agree so much, why is there not more lending?
Well, we do agree, but there's also a time and a place for lending to be a risk-reward measurement, right? So at the end of a recession, the qualifications of most borrowers are lower than they were at the beginning. And the banks right now, more than ever, you don't want us to make loans that are not strong and well suited for the consumer or for the small business. So we agree viscerally that more lending needs to be done. We're looking for those opportunities to make sure we don't put people in harm's way, we don't put banks back in harm's way. So it's an agreement at a very high level, but the volume of demand and the needs for consumers is not always aligned with the ability for the risk that's out there. So we have to find that very important natural tension.
How much longer will that take?
Well, you know, as the economy recovers, it gets much better. Every bank in that room talked about adding many small business originators and setting very aggressive goals for small business lending next year. You'd be very pleased to see we're probably more optimistic than the pundits might be. With that in mind, we're putting everything we can. It's the coal to our engine. Lending is what we do, and so we want to make more loans. We have to find a way to qualify more people and not put ourselves in risk 3 or 4 years from now because of actions we took at a moment in time that weren't well suited.
So are you saying this meeting was all productive and pleasant after he called you fat cats who just don't get it?
He didn't call us any names, and it was productive, and I would say it was very serious. So it was not a moment where we all went around and celebrated the holidays. We talked about how we can do a better job. He was very clear on those 4 key points.
It was very candid.
Wants more credit availability, wants housing modifications to be higher. It's insistent that we do a better job in telling our story for executive compensation, And most importantly, we do support regulatory reform. We haven't done a good job of sharing that.
Thank you. Thank you very much.
Okay, well, I think we're done.
He indicated there's a disconnect between what you said here about regulatory reform and what your lobbyists are doing on the Hill.
And he shared that with us as well.
And how do you feel about that?
We think there's probably a disconnect as well, so we're going to do a better job beginning with the CEOs to work with the lobbyists directly and be the voice with those administration leaders to come to a conclusion that we haven't before.
And be more supportive of it.
And to be more clear about it. We can make those decisions, so we're planning to take a higher position in making those decisions together.
Are you going to change your positions that the lobbyists are now arguing?
We're with them in most cases, but we probably haven't articulated the details very well, so we'll do a better job.
又想 Jason。
Got it, bud. Hey, Will.